I am Pratap here. I wish you all a very happy and prosperous New Year 2025. Today is the 1st January 2025. In this video, we are going to discuss the high liquidity zones identified in the previous end of the day report. Even before that, all of you please understand, we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over 8,000 US dollars and it is a complete free training. All the training lessons you can access from our NeoStock YouTube channel. At our channel homepage, please click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to this post having our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So please join at our Telegram channel. It will be helpful to you. Okay, now let's get into the... Before getting to the analysis discussion, this is also end of the month January and we started, end of the month December and we started the new year. So let us look into the performance statistics of December month. December month, total 65 high liquidity trades are executed. Out of these 65, the successful trades are 58 and stopped out trades are 7. And the success rate during the month December is 89.2%. It's a very good percent. Very, very good percent. Close to 90% success rate. But the average intraday ROI is slightly reduced. Our average daily intraday ROI is 6% for our high liquidity zones. But this month we got only 4.9%. So 1.1% less ROI we got. There are several other reasons. One major reason we identified, good number of trades during this month are not able to reach 15 minutes target zone because there are some 1 minute high liquidity zones or 5 minutes high liquidity zones did not allow the prices reach into 15 minutes for some of the stocks. So that is one of the reasons why ROI is reduced. And the second one is a few stocks gave multiple trades and those trades we calculated individually. First trade we would have got around 3.9% ROI. Second trade we got around 3.5 ROI. Both together we get around 7%. But our calculations, every individual trade has a separate trade, even though there are multiple trades from the same job. So these are the few factors that is impacted in achieving 6% ROI. And some stocks, there are little shortage of 6%, like 5.5%, 5.6% ROIs are there for till 15 minutes target. That is another reason. Of course, few stocks we got very good ROI. We got 9%, we got 11%, even 15% we got. Few stocks during this month. But the success rate is very, very high. That is also we should observe. And let me show you the Excel sheet also. Let me start with the starting of the month, 3rd December. See here, this is the first trade we got. We got a very good success rate. Only 9th IPCA, Mahindra and Mahindra Finance, same stock, 2 fine-tuned zones are violated. That is the only one stock. Until 13th December. 13th December again one trade is stopped out. After that 20th December one trade is stopped out. And 27th December 2 trades are stopped out. And 30th December one trade. So the total 7 trades are stopped out. So this is about and let us evaluate the performance of high liquidity zones generated in our yesterday's end of the day report. Yesterday end of the day report, we identified 13 high liquidity zones from daily and 75 minutes time frame. And we got 3 good trades. First one is MCX, very interesting, MCX. The reason is MCX is not a daily trade. Actually, we have a daily zone here. Did you observe this is the daily zone? And this daily zone is overlapped with a 75-minute zone. Do you remember lesson 22 concept? Lower time frame zone as an horizon to the higher time frame zone. This 75-minute zone is identified as a high liquidity zone. That means the 75 minutes high liquidity zone is an horizon to the daily high liquidity zone. So that's why this area order flow is much stronger. That is what you should observe. And yesterday price closed inside the daily zone, yesterday's price. Let me go to the daily time frame, you will understand. See, yesterday price closed here. But our software identified stocks near this 75-minute zone, where price again entered today and gave a trade. Yesterday also it gave a trade actually from the same zone. Okay, how we got these trades, we will understand. Our focus is not on the daily zone. Our focus is on the 75-minute zone because our software identified this 75-minute zone rally for base candles and rally as a high liquidity zone. Because previously I have drawn this daily high liquidity zone, I am able to find this 75-minute zone is the horizon to this daily high liquidity zone. Okay. So this 75-minute zone we need to fine tune with 15 minutes time frame. See how I fine tune the 15 minutes. We have 2 order flows are there in this zone. We have 2 order flows. Here one order flow and here we have drop 1, 2, 3, 4 base candles and a rally candle. Drop base rally. This is the 15-minute zone. And we have another 15-minute zone here. We have a rally. 1, 2, 3, 4, 5 base candles and a rally candle. Now you will understand this is a big candle because when you are seeing a very high explosive candle, these candle sizes are looking very small. The moment you hide that high explosive, this is a clear, you can say rally 1, 2, 3, 4, 5 base candles and a rally candle. This is another 15-minute zone. And these 15-minute zones again fine-tuned with 5 minutes time frame. I am shifting to the 5 minutes time frame. In the 5 minutes time frame, you have a drop, 2 base candles and a rally candle. Drop base rally. But if you look into a little below before, you see again you have a drop, 2 base candles and a rally candle. And this 5-minute zone is the horizon actually for this 15 minutes fine-tuned zone. This 15 minutes fine-tuned zone picked up the orders from the zone and moved. While picking the orders, drop base rally is created. But actually, what is the main horizon? This is the main horizon. This drop base rally. From this area, you need to plan your trades. And moreover, this is also working as a high liquidity zone. Of course, the lower time frame zone as an horizon to higher time is a powerful zone. Apart from that, this also could be high liquidity because already tested several times and each time it is creating a new order flow. See here, drop base rally, new orders added. Again, drop base rally, new orders are added into this zone. And what about here? Here also we have a fine-tuned 5-minute zone. This 15-minute zone again having drop base rally. This is the fine-tuned at the distal line. LTF, 5 minutes LTF to 15 minutes horizon. So this is the actual institutional order flow for this entire 75-minute zone point of view. See, this entire 75-minute zone, this one picked up the orders from this 5-minute zone and started moving up. And again this fine-tuned 15-minute zone picked up the orders from this 5-minute zone. And today we got a trade from this zone. See, yesterday also this one has given, because this is the LTF zone. LTF zone, multiple trade opportunities it will give. See, yesterday it gave. See how huge profit it gave yesterday. MCX. See, today also it gave, but today prices went almost close to, it didn't touch, but almost close to the distal line of this 5-minute zone. See the move, very good move it has given, till the 15 minutes target. Here we have a 15-minute supply zone is there, rally, 2 base candles and a drop, and this is the one it reached the target. So how much profit MCX has given? MCX has given 8,550 rupees profit based on one futures margin, and the ROA is 5.6% as per one futures margin cost. 5.6% ROA it has given. And within how much time this trade is completed? Let me go to the 5 minutes time frame. When we got the trade at 9 o'clock 20 minutes candle, it gave the trade, and when it reached the target, 10 o'clock 10 minutes candle, it reached the target. 10 o'clock 10 minutes, 5 minutes candle. Maybe 10 o'clock, before 10 o'clock 15 minutes, this trade is completed. That means less than 1 hour the trade is completed, a little less than 1 hour. Okay, then next one is Maruti. Maruti is a 75-minute supply zone. This is a 75 minutes supply zone. We have a drop, 1, 2, 3 base candles and a drop candle. It's a very tricky trade. Observe carefully. These are the kind of experiences you should get. How cleverly we planned our trade, you will understand by looking into this. Okay, go to the 15 minutes time frame. Here you have drop, 2 base candles and again a drop candle. Drop, base, drop. This is the fine-tuned 15-minute zone. Go to the 5 minutes. So very, very tricky. Here, this is not a valid 15-minute zone. This is looking a big candle only. Base candles, because you are seeing a very high explosive, it looking like a small. Let me hide this very big candle, you will get clarity. See how big this candle compared to the other candle. The size of this candle and the size of this candle is almost same. Maybe body is small, but see the length of this candle. Definitely this is not a medium size candle. This is a large candle. Even this is also almost. So you can't keep such a large candles in the base. Okay, maybe this candle you can keep in the base. These are all base candles. This is a medium size candle, leg candle. But this is a large candle. These are large candles. So you can't draw because of this high explosive. These large candles keeping in the base, you see how the risk is increased all of a sudden. And see the number of base candles also in case. If you consider this is a drop and this is the drop, base, drop, 1, 2, 3, 4, 5, 6, 7 candles are there. If you feel all these are all small candles or medium sized candles, if you feel like that. But if you hide, we won't get that kind of feeling. These are all medium sized candles. So that is the reason why this is not the area to plan. Mostly such kind of zones will be violated. But what happened here last time, when prices entered in this area, institutions created an order flow here. But here we don't have a proper leg out candles, right? But how nicely prices entered and a huge rejection from here. That means some order flow is there. But price structure is not good because of this candle. This is looking like a medium sized candle. That's why I told you sometimes when the clarity is missing, you can use 3-minute zone as a supplement to the 5-minute zone. Do you remember we have a separate session on this topic? 3-minute zone is not the replacement to the 5-minute zone, but it can be a supplement. When 5-minute zone clarity is missing, maybe at the time we can consider. Actually, I would not have considered 3 minutes if this price action would not have happened. Because after this price action, prices sharply move down. So that means there is some order flow is there inside this zone. When it happened last Monday, today is Wednesday, right? On Monday it happened, this price action. By seeing this price action only, I got interest in this area. Some order flow is there, but 5-minute zone it is missing. So that's why what I did, I went to the 3-minute zone and surprisingly we got 2 order flows. See here. We have a rally candle, base candle, drop candle. Again next, drop candle, base candle. Again a drop candle. And from this order flow, 3 minutes order flow, it picked up the orders. Entire move has come. But there is one more order flow is there. This is a tested one. Definitely you can't plan trade. But this is the area you can plan. Exactly today prices entered into that area. See, today morning at 11 o'clock 18 minutes. When this trade happened, after the previous trade is completed, MCX trade is completed at 10 o'clock 15 minutes the trade is completed. And after that you got this trade. 11 o'clock 18 minutes you got this trade. And reached the 15 minutes target at 1 o'clock 12 minutes. 3 minutes candle. That means in 1:15 the trade is completed. 11:18, say 11:15 approximately. 2 hours this trade is continued. After 2 hours it reached the target. Go to the 15 minutes time frame. So here you have failed RC candle as a leg-in. You have 1, 2, 3, 4, 5 base candles and a rally candle. That way this target we have drawn and reached the target. How much profit it has given till this 15 minutes target? Maruti has given excellent profit. It has given 6,462 rupees profit, which is 6.6% ROI. And your futures margin cost is less than 1 lakh. It's very cheap compared to the other stocks. Less than 1 lakh. If you have 2 lakhs, you would have taken 2 futures you might have taken, 2 lots you might have taken. Then you would have got around 12,800 or 900 rupees profit you would have got. 12,900 rupees profit. We are calculating based on 1 futures margin cost. On your investment it is 6.6% ROI it has given. But the only thing is it's a very tricky trade. Only experienced people will mainly focus on such kind of trades. Even I would have ignored if this price action would not have happened. I know by seeing this candle, I sensed some order flow is there in this area and moved. Sharply prices moved down. That kind of, by looking into the 5 minutes chart, this one created me the interest. This price action. It went to the zone and came down. This is a 3 minute, this is a 3 minute zone. 3 minutes can be a supplement. If it is not 3 minutes, if it is 1 minute zone, then this is not a fine-tuned zone. 3 minutes is a fine-tuned zone. Because 3 minutes can be used as a supplement to the 5 minute zone. When 5 minutes clarity is missing. Suppose 3 minutes is not good, 1 minute proper order flow is there, then it could have been an aggressive trade setup. But aggressive trade, you can't take trades without price action close. But we don't have any issue with 3 minute zone because 3 minutes is only a supplement to the 5-minute zone. In place of 5 minutes, you can use 3 minutes sometimes when clarity is missing. That's why in the comment section also clearly I mentioned this is a fine-tuned 3-minute zone. Inside of 15 minutes, why we are saying fine-tuned? Because between 3 minutes and 15 minutes, we have 5 3-minute candles. In lesson 15, in your training lesson 15, I explained you how many candles should be there between one time frame to another time frame. 3 to 5 candles is an ideal scenario. Rare situations you will be using 6 candles, like 24 hours trading sessions, like forex market and all. You have 24 hours market. You after a daily candle, you will be referring 4 hours candles. 6 4 hours candles we will get. That is an exceptional scenario. But the general ideal scenario is between 2 to 5 candles are allowed. You can use either 3 candles or 4 candles or 5 candles. Anything is allowed. So between 3 minutes and 15 minutes, we have 5 candles will be there. 5 3 minutes candles. If it is 5 minutes, you have 5 minutes candles will be there. So that's why I am telling you. 3 minutes can be used as a supplement to the 5 minutes. You can't replace completely. But wherever 5 minutes clarity is missing, at the time you can go for. On what basis we are considering? Because some price action happened earlier here. And price action sharply moved the prices down. That's why we identified, we went to the 3 minutes, we got a very clear 3-minute zones here. So this is such kind of observations you have to do. See prices, it took the trade and sharply came down. Okay. So this is the candle we got the trade today. And after that what happened? This zone is violated, and after that no more order flows, and entire high liquidity zone is also violated. Maruti is a very good lesson for all you people who are expecting to gain some experience, because this kind of analysis will help you improve your experience. In future you will make such kind of observations, but remember, you should use 3 minutes very carefully, because mostly we use a fine-tuned 5 minutes. You can't replace just like that. When proper clarity is, if you have some kind of 5-minute zones you want to drop, but their clarity is missing, only in such kind of situations. If any additional price action clues are there, that will be even much advantage for you, going for 3 minutes time frame. So this is about Maruti, and then we got one more trade, that is IGL. IGL is also a 75-minute zone. (75 minutes high liquidity zone). How our software identified? A rally, 2 base candles and a rally candle. This is what identified. Above daily supply zone is there. See, from daily supply zone, prices are retracing back to the 75-minute zone. And 75-minute zone, how I fine-tune? Go to the 15 minutes. Observe very carefully. Here you have a 15-minute zone rally as a medium size leg candle. You have medium size base candles 1, 2, 3, 4. But see the lower wick of this leg out candle. Till there we have to draw the zone. In rally, base, rally, either lowest of the base candles or lowest of the leg out candle, not leg in. If it is a drop, then leg in also you will consider. You already learned in your phase 1 training program. So that's why rally, base, rally, till the lower wick of leg out candle I have drawn. You have a very big 15 minutes zone here. But here what is this zone? This is the 5 minutes zone, fine-tuned. This is the 5 minute zone that we will see in 5 minutes time frame. And here, go to the 5 minutes time frame. 5 minutes time frame, are you seeing? drop base rally. Let me draw this. Demand zone. Apart from that, are you seeing the horizon? Rally, base, rally. This is the horizon for this entire 75 minutes high liquidity zone. If you observe both these zones, they are LOTL zones. Almost very small difference is there, very, very small, negligible difference. LOTL. Almost it picked up the orders from this zone. Generally what happens, sometimes orders will spread a little above the zone. So maybe that is the reason why sharply it took the orders and again a new zone is created. That means for this 5-minute zone, this is the horizon. Now you have a question, where to plan our trade, in this zone or in this zone? You can plan in the top one, but your stop loss should be this one. The second one, in LOTL scenarios, if you are planning trade in the upper one, the lower zone should be your stop loss. Then how much risk? The risk is beyond 2%. If you take a trade here and if you exit the trade below this zone, it is beyond the 2%. Almost 3.3% risk is there. So you can't take a trade here. So that is the reason why I deleted this. So this is the horizon. This is the horizon you should plan your trade. See, if this is not the intraday, if it is a WIT trade or MIT trade, you would have taken your trade here itself. You can do position sizing if the risk is beyond 2% level in MIT or WIT or even DIT trades. But that flexibility you won't be having in intraday. You can't take such a huge risk. Maybe intraday also you can do position sizing. But again, achieving a ROI till 15 minutes target may not be possible. You have all these practical issues. So that is the reason why our plan is in this area. See, and when you got the trade in this candle, 9 o'clock, 40 minutes, 5 minutes candle, you got the trade. But prices went almost deep inside, near to the distal line. Almost very close, small, very small gap. And then prices moved up. But here I have drawn a blue color line. Till there only it reached. Okay, now we can't tell. Prices will move down and again it will go up. But that didn't happen. See, once again it reached. First time, second time, third time, fourth time. Today majority of the day prices did not cross this blue color line what I have drawn. What is your expected target in 15 minutes time frame? Your target should be somewhere here. The 15 minutes target. Whatever we fine tune the 15 minute zone till there. But that today it didn't reach up to that. From here to there we have, from here to here we have RR is there, sufficient RR. But till this blue color line there is no RR, but you already took the trade. This blue color line, some order flow might be there. So is there any lower time frame high liquidity zones? Clarity is not there. I went to the 5 minutes. Clarity is not there. I went to the 3 minutes. There also below this we have a 3 minute zone is there. Drop, base, drop. But this is almost violated. Pierced this zone in case if you feel this is the zone. Anyway, I went to the 1 minute also no clarity is there. But previously the 1 minute candle from this line, it started moving down. So something is there. Maybe you can see that order flow only in the tick wise data, or maybe 15 seconds data or 30 seconds data. We don't have such kind of access in trading view. But something I sensed, that's why at this high of this candle, I have drawn a blue color line. And then I've been observing prices reaching and coming down. Again reaching, again coming down. Again it reached and came down. Again here also near to this it went. Throughout the day this is the one The blue color line area is the one actually holding the prices. So probably after a third test or second test, you should realize, see, this is the first time, this is the second time, this is the third time. At least you should realize here we should exit our trade somewhere here, or maybe using some trailing stop loss you should exit. Different techniques you can apply. If not here, definitely you should have exited here. This is the fourth time. You should plan to exit either here or here, because it took a lot of time. Multiple times it is holding the prices. When you took the trade at 9 o'clock 41 minutes. And here, by the time prices reaches, it is already 1 o'clock 6 minutes. So intraday you can't hold that much time. Your money is completely struck up. At some point of time you have to clear. You should realize. Probably this could be the right choice to exit. In case if you did not exit here, see, this is at 11 o'clock 18 minutes. After that, almost, this is 11 o'clock. Almost 2 hours we waited for the prices to reach here. So this is the last opportunity to exit. So that is the reason why I calculated the profit up to. This is the one failed to reach the target. It failed to reach the target. But IGL has given till that particular, this is the 5-minute zone as an origin for 75. So 3.3% ROI it has given. The profit is only 4,743. So these are some of the trades, such kind of trades dragged our ROI down. Why we did not achieve 6% ROI during this month is some of such kind of trades we got this month. Generally it won't happen, but this month many such kind of trades we have seen. So that is good enough to make your ROI go down. But anyway, profit is a profit. That is what you have to understand. So these are the 3 successful trades we got. If you look into the other stocks, let me quickly go through. HDFC Bank already we discussed. This is a daily zone. Previous videos I explained. Please refer how we fine-tuned this zone. Now I am not explaining because already we discussed. Today price also did not reach. MZL is also the same case. This is a daily high liquidity supply zone. This also we discussed earlier. In the previous videos I explained this drop-based drop. We have a fine-tuned 5-minute zone. Today prices did not reach. And Zydus Life already we discussed. We got a couple of trades also. This also we discussed. Please refer the earlier videos. We have a high liquidity 5-minute zone, gave good number of trades earlier for. We took these trades, some of these trades we took from Zydus Life. And today also price did not reach the zone. Next one is a Bajaj Auto. Bajaj Auto is a 75 minutes high liquidity zone. But very interesting thing, actually this is a daily zone. Have you seen? Rally, base, rally, this is the daily zone. Previously we fine-tuned this zone. I explained how we fine-tuned this zone previously. And in that fine-tuned, the 75-minute zone is also high liquidity zone. Our software did not identify this stock near the daily zone. Our software identified this stock near the 75-minute zone. Let me go to the 75 minutes time frame. Okay, here we have a 75-minute zone. This is the fine-tuned zone of the daily zone, but our software identified this zone. See, this is a failed ERC candle as a rally, one base candle, medium size leg candle also part of the base, and then a rally candle. This 75-minute zone our software identified. But previously when I fine-tuned, I considered this as my leg in. This is the base candle, this is the rally candle, and I fine-tuned this zone. Earlier when I explained my video, please refer. I considered. But why software did not consider this zone? Because this is the nearest to the current price. This rally, base rally is the nearest, and moreover, this is the LOTL zone. That means in my analysis, I ignored this. This rally, base rally, I ignored. But our software, see how cleverly it identified. But in my earlier analysis, I identified this LOTL zone, I identified. Okay, now after drawing this rally, base rally, I removed that LOTL 75, but still 15 minutes and fine-tuned 5 minutes is same analysis. It doesn't make any difference because there are no other zones before that. That means the fine-tuned 15 minutes and fine-tuned 5 minutes, what we discussed earlier, it is still valid. Of course, this LOTL zone is also valid, but this is the main source. So always we focus on the main source. I removed that. Now you may ask a question, why you did not identify this earlier? That is the difference. See, that is the difference between how software perfectly works and a human makes the mistake. Maybe earlier I did not consider, maybe because of this leg candle which is part of the base, might have disturbed me in my analysis, might have ignored this. But software won't take any such kind of emotions. It just follows the rules. So cleverly identified this role. But still we didn't made a mistake. We identified LOTL zone, this drop base rally, which is having the, previously we have drawn the zone like this. In my previous analysis, this is the 75-minute zone. This is how I did. This one was missing previously. Let me delete. This was my earlier analysis. And this we discussed in the previous videos. Please refer previous videos. But today, what our software identified? This one. See, the moment it identified as a rally, base rally, and our 75 minutes is an LOTL zone. The main source I missed in my analysis. Okay, fine. It doesn't make difference because order flow we did not miss. Ultimate goal is we need to identify 5 minutes order flow. Whether this is LOTL or this one, main source. Finally, we identified the order flow. And there we got the trade also. Okay, anyway, how we identified this, how we fine-tuned 15-minute zone earlier. So here we identified a 15-minute zone. Rally, 3 base candles, rally, LOTL. This is the origin. From here it started. So that way we have drawn the 15-minute zone. Rally, 3 base candles, and this failed ERC is the origin and continuation. The fine-tuned 15-minute zone I have drawn. Are there any further fine-tuned 15-minute zones? No proper fine-tuned 15-minute zones here. We have drop base, and this is also a base candle. Base candle. It's not clear. No proper leg out here. Here also clarity is not there because this is a drop candle. Drop base, drop, and then rally. There is a pivot. No zone here. 15-minute zones. So this is the only one we identified earlier. There inside that we identified a fine-tuned 5-minute zone. Here we have a fine-tuned 5-minute zone. This is the one rally candle. You have 1, 2, 3, 4 base candles and a rally candle. This is the fine-tuned 5-minute zone we identified earlier in our discussion. And today this zone is violated. Why? Because it is tested recently. See here, when it was tested on 23rd December. Prices went deep inside. See here, almost close to the digital line it went. And today this order flow has been violated. This 75-minute zone. So this is as per the concept when a zone can be violated, we know. When there is no fresh 5 minutes order flows are not available, fine-tuned 5-minute zones. Mostly those zones will be violated. That way the 75-minute zone is violated, but not the daily zone. Daily zone is still valid. 75-minute zone is gone. See, this is the 75. It is gone. But daily zone is still it is there. See, a new 75-minute zone is created today. Drop, base, rally. So still institutions are having some interest on this area, the daily zone. Okay, fine. This is about Bajaj. Next, Crompton. Crompton is also a 75-minute zone. See, Crompton is violated completely. How do we know it is violated? Because in the previously we discussed Crompton. Previously we analyzed this stock. Previously I told you this zone will be violated because there is no proper institutional order flow. Go to the 15 minutes. There is no proper 15-minute structure. We have a drop, we have a rally, and no base candles in between. And here so many base candles, lot of consolidation here. Still there is a possibility here. Suppose if you feel, of course this is a base candle, it's not easy to convince. If you feel this is a failed ERC candle as a leg-in, let us assume this candle is bigger than the medium size candle. In case, if you feel this is a leg-in, this is a base candle, and this is a rally candle, you can draw a 15-minute zone like this. 15-minute zone. Inside you draw a 5-minute zone. We have 5 minutes, clear order flow is there. We have a rally, base, rally. Let us draw the order flow here. See this fine-tuned 5-minute zone, type 2 proximal. Type 2 proximal also tested. When? Monday. This Monday 30th December it tested this zone, and after that see how sharply prices move. Probably somewhere here 15 minutes target zone might be there. See here we have a drop, base, drop. Reached the target. When you got the trade at 2 o'clock, and when it reached the target at 2:45, in 45 minutes this fine-tuned zone is completed. Have we registered this trade? No. Why? Because on 30th the stock is not registered. But it worked very well. Even though software did not identify work. That's why we discussed yesterday. These fine-tuned 5-minute zones may work. But chances are 50-50. That is what we discussed yesterday, HLQ analysis video. Yesterday I explained about how I developed this the daily or 75 minutes HLQ zone strategy. Why only we are referring the zones when our software identified? Why we are not referring these zones? We discussed right yesterday. So based on that, sometimes these zones work, but you can't expect 80% success. 50%. Maybe this stock comes under 50% categories. The success category it came. We feel like, okay, we missed a great trade. Otherwise, we would have got a very good profit. So that way, even if you consider it is a tested zone, and today it is violated because it is not a fresh zone anymore. Because the type 2 proximal is tested. Even if you consider this 15 minutes, this candle as a ERC candle, if you feel. But I was not convinced, so that's why I didn't draw this zone. But anyway, as per our earlier analysis, this zone has to be violated because we didn't have a proper structures here. Maybe this is if this 15-minute zone is like a compromised zone. I already explained the concepts. Sometimes we can compromise and draw the zone. You can compromise at the leg-in. You can maybe such kind of zone. It worked very well this time. Sometimes may fail also. But anyway, this is the only one in case if you feel any order flow. This is the only one fine-tuned order flow that was also already tested. And today no more order flows. Easily the zone is violated. So this is about Crompton. IGL we discussed, MCX we discussed, MFSL we discussed or not? MFSL is a 75 minutes high liquidity zone. Already we fine tuned this zone. I think this is a this fine tuned 5 minute zone is a tested zone. Yeah, this is the one I think we got a trade previously. Yeah, MFSL. Let me look into the Excel sheet recently. MFSL. Yeah, on 24th December we took a long trade. 24th December. This is the one. Or this one. Sorry. MFSL. 26th December. Yes. This is the one with the entry buffer. We took the trade. The blue color line was entry buffer. Previous day software listed. After that, prices again came to this zone on 31st December. 31st, have we to consider this trade 31st December? MFSL? No. Why? Software did not identify this zone. But still this zone worked very well, right? Yes. It comes under 50% success rate category. It worked, the fine-tuned zone. This time, first time prices came inside the zone. This fine-tuned zone. Now this is no more a fresh zone. Next time this will be violated. But why we did not take this trade on 31st December? Because our software did not identify the stock near the zone. Even though it did not identify how it worked, that is what I told in our yesterday's HLQ analysis video. It will work, but success rate is only 50%. This stocks also comes under 50% success rate category. It worked. But today anyway, we can't plan trade in this because it is already a tested zone. And also today price did not enter into this zone. Because already yesterday prices came and picked. It is a tested. It is no more a fresh zone. And no more order flows available. But anyway, today prices did not enter into this zone. Look into today's 75 minutes candles. This is the first, second, third, fourth, fifth. Prices did not enter. Next one is Syngene. This is also a 75 minute zone. Where are the zones? Okay, very slow it seems. Syngene is having a daily zone here, but before that there is a 75 minute zone here. Our software identified this 75 minute zone. It identified this as this failed ERC candle. We have 1, 2, 3, 4 base candles, rally candle. And this 75 minute zone is fine tuned with 15 minutes time frame. Rally, base, rally, the 15 minute zone. This is again fine tuned with, and not only that, here also there is one more 15 minute zone, rally, base, rally. This 15 minute zone is the origin to this entire 75 minutes high liquidity zone. This rally, base, rally is the origin. Okay. So we have two fine-tuned 15 minute zone. One is the origin and another one is inside the zone. Now again let us fine tune with 5 minutes time frame. Here we have a 5 minutes order flow, drop, base, rally, and again it picked up the orders, came, picked up and came down. It is not a fresh zone. If this is a high liquidity, we can plan multiple trades. But anyway, it is a tested. But here the origin is having a 5 minutes order flow. We have a drop, base, rally and follow through candles. But earlier prices came close to this zone, but not exactly entered inside. So this time definitely we can plan a trade in this area. This is the 5 minutes origin. This is the 5 minutes fine-tuned 5 minute zone inside the 15 minutes origin. Okay, this is about Syngene. Next one is Apollo Hospitals. This is a 75 minutes supply zone. Let me go to 75 minutes time frame. This is the trade we missed very narrowly, very narrowly. Otherwise, this could have been a very good trade for us. Just I think 15 paisa difference, we missed this trade. 15 paisa difference after adding entry buffer. Okay, this is a 75 minute zone. How our software identified? Our software identified this as a failed ERC candle as a drop. You have 1, 2, 3, 4, 5, 6 base candles and drop candle. And this one fine tuned with 15 minutes time frame. So this is the 15-minute zone. Something is messy here. What is happening? Is it a daily zone? It is supposed to be 75. Daily we have rally base drop is there. This is actually a daily zone is there. I think inside the daily 75 minute zone is there. Previously we fine tuned. Now that 75 is also high liquidity. I think software identified that 75 minute zone as a here we have a draw ERC candle as a leg-in 1, 2, 3, 4, 5, 6 base candles, maybe drop candle. This is how software might have identified the 75 minute zone or this drop candle. Okay, now 15 minutes zone is there inside 75. This 15 minute zone is the origin for this 75 minute zone. So this is the 75. We have drop, 2 base candles and a drop. This 15 minute zone is the origin for this 75 minute zone. In that origin, the 15 minutes fine tuned, sorry, the 5 minutes fine tuned zone. So here drop, you have a base, drop. This is the 5 minutes. This 5 minutes is the origin for this entire 75 minute zone. This is the 75 minute zone. This 75 is high liquidity zone. This 75 high liquidity is inside daily high liquidity zone. And this daily zone already we fine tuned earlier. But anyway, today what happened? Prices came very close to this blue color. Blue color line is 0.1% entry buffer. This is our 5 minute zone. I added 1% entry, the blue color line just came very close to the blue color line. See, you can't again further add buffer to this entry buffer. That is foolishness. Price has to reach this blue color. That is itself is the blue color itself is the buffer. So you can't again move further. Before this blue color you can't take trade. But I am telling you how sharply we missed this trade today. Otherwise, see how much profit it would have given. Huge profit it would have given. It's a bad luck. Okay, fine. Sometimes it will happen. If you compromise all such kind of things, first of all, 0.1% buffer itself is somewhat we are compromising at our risk management level. But we don't want to miss the trade, so we are using 0.1%. Some people don't use 0.1% buffer also. If the prices come, they take trade. Otherwise, they just leave the trade on that day. It's all depending on our risk management. That is what you have to understand. So this is the way Apollo Hospital, we narrowly missed the trade. And next one is Federal Bank. This is also a 75 minutes high liquidity zone. This is the one drop base drop. and I didn't fine tune this zone. That means there are no 15 minutes order flows here. See here, no proper 15 minute structure here. Previously prices reached near to the distal line. Here also it's a pivot. They came very drop. Even 5 minute structures also, if you see, we have a rally based drop is there. But this is not a fine tuned zone. If you plan a trade, price action clue should be there. At present we don't have any price action clue to plan a trade in this area. Many times what will happen, such kind of 5 minute zones will violate easily. Maybe it will give a small push, a little, and again it will move, next time it will violate, and the whole zone might be violated. Fine tuned 5 minute zone is the most safest trade. So this is Federal Bank, Maruti we already discussed, and the last one is SAIL. SAIL is also 75 minutes high liquidity supply zone. We have a drop candle, 2 base candles, and again a drop candle. This is how our software identified this zone. This one I fine tuned with 15 minutes time frame. Here we have a rally candle, 2 base candles, and a drop candle, and then 5 minutes time frame. Here we have, see, this is the failed ERC candle as a drop candle, is a leg in drop. These two are base candles. This is a medium size leg, okay, part of the base. Already we have a base candle. Now drop candle. So this is the area we planned our trade, but today price did not enter into the zone. So this is about the high liquidity zones. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.